Hello again, traders, and welcome back to the Hot Stocks Outlook for November 1st, 2024. Hope you all have had an excellent week out there in the financial markets. And as always, we're going to use this time to take a look at the most recent VantagePoint A.I predictive forecast. So if you haven't already, you can actually go ahead and click on the link down in the description below and sign up for a live demonstration so you can learn all the specifics about how these predictive artificial intelligence technologies are helping traders make much better trading decisions out there in the marketplace. Now, as we typically start out each week, we tend to take a look at the SPY ETF. And so we're going to look at the chart and the most recent predictions there, but also our graph here, which takes a look back at some given periods of time just to get a broader sense of where market prices have been. And so a couple things that stand out, we see about 12 months, we're up almost 36%. Obviously a very good year for equities, up over 20% year to date. But more recently, we've had a little bit of trouble, especially this week. And so I want to highlight how VantagePoint A.I users are able to identify really the best opportunities in the market, but with a high level of predictive accuracy here. And so what we can do is actually explain how all of these tools work on the SPY itself. And so what you're seeing here is daily bars and candles. So each one of those candles will represent a full and complete trading day. And it's right up against the price data where we first want to take note of this black line and also the blue line value that you see there. Now, the black line value that you're seeing there, that is what we call a simple moving average. So this is a very common technical analysis tool. In this case, we refer to it as the actual simple moving average. And in this case, what it does is it just looks back over the previous 10 close prices and adds those together and then divides by 10. And so what VantagePoint traders use that information for is really to act as a baseline for other predictive tools. So this lets us know where market prices have been. But a lot of the weakness with tools like this is that all the data comes from the past, and it's also completely isolated to just the SPY. It's not looking at how is the NASDAQ and the dollar index and other major stocks like Microsoft or Nvidia. How is that affecting how the S&P 500 is likely to trade? And so what we're able to do with VantagePoint is compare that black moving average, or what you might call a lagging moving average, to this proprietary predicted moving average. And for this number, essentially a prediction of future prices, for that to get calculated and plotted every evening, well, this is where the technology of artificial neural networks are performing what we would call intermarket analysis. And so whatever your target market is, in this case, the SPY, it's going to look at really dozens of markets that are known to drive and influence the future price of that asset. So when we're dealing with something like the SPY, well, of course, we can get very important price clues from the NASDAQ, from the S&P 500 futures, from the value of the dollar index, from global interest rates, and also, like I said, individual stocks, which have heavy weightings or potentially some very subtle or important price clues are driven out of some of those relationships. And so it really looks at all of this collectively together and uses that to produce these highly accurate predictive forecasts. So what it does is it really weighs down on our predicted moving average, and we see that blue line crossing below the black line in this case indicates that average prices are going to start moving lower. So obviously with yesterday's price action, we can see, well, sure enough, the S&P 500 took a little bit of a trip lower here. And there's just increased volatility as we've got elections and a lot of earnings reports and things coming through. But what I would just want to highlight is the accuracy of the forecast here. And so if we look at the very bottom of the chart, you'll also see this other bar that goes from green to red, back to green, back to red here. And this is another indicator utilizing that proprietary predictive information, looking at those intermarket relationships, but it's tuned to solve a different problem for traders, and that being very short-term strength or weakness over the next 48 hours. So you can think of that as 48 hours. You can think of it as a couple of candles. And so what this generates is really an overall forecast for traders in addition to intraday levels. So if you look at the very right-hand side of the chart, you'll see this bar that is pretty much a shadow candle that's produced before every trading day. So what will occur is that the market data will actually trade through the day, and then the data will populate the chart, but the predictions will stay exactly where they're at. And so what we can do is actually look back and see, well, how accurate are all of those predictions before the trading day? And so we can see as we went into that downtrend, it's indicating you might want to short up near these predicted highs within the downtrend. What's additionally also pretty interesting about this is you'll notice that the neural index gets bullish here. So it's indicating that, look, there's strength over the next couple of trading days, but the overall trend is lower. And so once that neural index goes back down to what might be a 0, or we can just say a red configuration, you see that that's where that momentum really comes in, and we get this slide lower in prices of the SPY. So I just wanted to highlight that because all of these predictive forecasts work the same way, whether you're trading the SPY or individual stocks or futures contracts. And this is what allows traders to really understand, well, what's the bigger picture here? Should I be looking to get long? Well, no, you actually see on this green candle here, neural index is bearish. And sure enough, 2 days later, we're getting that big collapse in prices. So let's go look at some more examples here. And we've got some examples to the bullish and the bearish side. Seen a lot of volatility, especially around earnings. But a lot of these markets like Sprouts here, we see we had very accurate forecasts leading into those earnings. So let's look at this exactly the same way, right? So we've got really a lot of data going all the way back to really mid-September. So we're looking at almost 2 months of data here. And then we've got that predicted moving average moving above the actual moving average. Now, there will be these periods where that neural index goes bearish, and you tend to see that there's usually a very high, probability chance here that the market then, at the very least, runs sideways, if not moves lower for a couple of trading days. But this indicator at the bottom, it has an accuracy in excess of 80+% accuracy on a very wide number of markets. So you'll notice that when we look at this overall, it's mostly staying in that green configuration. And when you have that combination of the overall trend and the neural index bullish, well, that's where you see that momentum really start to take off. And so you can use that accuracy and say, okay, we're in the uptrend. Maybe there might be some weakness over the short term. That doesn't mean the overall trend is over. And so as we look at, again, those predicted highs and lows, this is where things really get exciting. Because if you can understand that, okay, they've got a directional bias to the bullish side, you'd want to be buying down at these predicted lows. And you see days like this where it's saying, okay, well, expect some weakness over the next couple of trading days. We see a little bit more volatility, but really even that predicted low, an excellent level to get involved within a matter of hours. The market is in profit and then moving up to some new highs. And so we get this a lot of moving down towards these predicted lows. We see, I mean, we're going to have, almost a dozen probably entries here as this market starts to climb higher each and every trading day. And what one has to understand is that you have all of this information before the trading day occurs. So like you see here, all of these predictive candles were generated before there was ever a market trading day. And so we get this big boost out of earnings, but that's led to a very nice move in shares of Sprouts Farmers Market. We can see from the move from earnings, you've gotten about a 27% rally here in the past 36 trading days. And again, with, multiple opportunities for shorter term and day traders in there to add to their longer term position, or just keep day trading that market, buying it predicted low, targeting predicted high, and potentially accumulating a position here. So 27%, really nice move. Here's shares of Carvana as well, pretty similar move, but again, a good example of highlighting that the overall trend being up, neural index, well, that's where that momentum comes in. And where do we see the market start to cool off, right? When that neural index goes bearish, we start to consolidate, market shares running sideways, and then that momentum coming right back into the market as the neural index flips back to bullish. We get another period of sideways price action, but sure enough, back to bullish. The distance between that predicted moving average and actual moving average starting to spread, and then getting that catalyst through earnings is just kind of a cherry on top for the past couple of months here in shares of Carvana. So overall here, this has been a 62% rally, and we are just seeing really large moves from a percentage basis, really all over the market. We looked at, MicroStrategy a couple of weeks ago, seeing very, very big moves. And if you can identify those moves at the right time and of course manage them with the help of those predicted highs and lows, well, that's where things really get exciting, right? So here's those predicted highs and lows. And again, you see very nice start to this trend, but really good levels coming in here. We're almost immediately moving down towards those predicted lows. You're going to see the market moving into profit within the next 48 hours and continuing on its trend. So even this past week, past 5 trading days, entry there, almost perfect. And then getting that move through earnings there. So really exciting stuff out of shares of Carvana. Here's Raymond James. So again, just keeping this very simple, right? Blue line crossing above the black line. Overall trend is up. Couple of blips here with the neural index and consolidation, but the overall trend, with this distance between the blue line and the black line, clearly in a uptrend, and that leading to, again, a boost around earnings. So what's especially helpful is when you can get that cushion in the market, right? So if you can get that nice entry, do some trading leading into the earnings, well, then you can have a lot of cushion to really take on that risk and benefit as shares advance. So about a 19% rally over the past just 21 trading days. But now there's some markets that aren't really doing so well, right? So we've seen that volatility come in. And what we want to do is really set up a game plan where we can identify the strong markets where those forecasts are very bullish, but also identify markets where maybe you want to hedge and get on the bearish side of things if you're exceptionally confident about that position or it makes sense in the portfolio. Or just straight up markets to just avoid, right? Things that you don't want on the radar because they're not showing those predictive indicators. It's showing that it's likely the market's going to advance to the bullish side. So here we see that blue line crossing below the black line. Again, these consolidation periods where the market tends to run sideways for a short period of time when that neural index gets, counter trend. But overall, I mean, you've got a very long period of time here with multiple extremely accurate forecasts, especially from these predicted highs and lows. So here we're about 6, 7, 8, 9, 10, 11, about 12 entries, maybe 13 there. Just yesterday as the market moves up and then trades lower, got earnings coming up. So of course, again, that can act as a catalyst and see market prices move pretty aggressively. But overall here, this is a market that you want to avoid. Shares off about 11% in just 33 trading days. So clearly a spot where there is some market weakness and not benefiting off of, again, all these markets that are doing extremely well. So you want to be careful in an environment like this, right? When we see the SPYs start to slip lower, certainly you've got these markets that have been working great. You can trail your stops and stay involved. But obviously the most recent forecasts have been, okay, well, look to the bearish side here. Don't get caught in a inappropriate position here. Here's shares of Cubesmart, and I wanted to highlight this because it's just a good example of how things shift. When you have these accurate tools that are saying, okay, well, blue line over black line, neural index very bullish over the duration of this rally. Well, if you're using these indicators to guide your action, well, you're going to be more likely to look for those markets again, where that predicted moving average is bullish, where all these predictive indicators with high levels of accuracy are showing that bullish trend and bullish short-term forecast to play out. But when things shift, you want to adapt. And so it's very clearly here that blue line crosses below the black line, and you get a lot of red out of this neural index each and every trading day. So, this chart here, we're looking back, this is, really almost 3 months of time. And then we can see the accuracy of all those daily predictive forecasts, right? So again, every single day, you're getting that predicted high and low candle predicted out before the actual market trading day occurs. And so on the way up, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, a dozen entries here on the bullish side that you see very quickly move up towards predicted highs for short-term trades or allow you to accumulate a position and really benefit off of that next advance before, of course, the trend shifts to the downside. So if we then flip back again bearish, we can see, okay, well, here's where that crossover to the bearish side comes in. And then just everything reverses, right? So now we're seeing selling from up at these predicted highs would really make the most sense, if you needed to take a position on this stock. So you see about half a dozen at least entries there to the bearish side. And then again, getting close to earnings, where we see again a lot of that volatility kick into the market, can act as a catalyst for prices and really send shares higher. But here we can see Cubesmart here. Shares off quite a little bit here, about 11% just in the past 27 trading days. And that's what's really important is if you're involved on the bullish side, you want to recognize, look, I need to get out of this market before we start seeing this decline in the share price. Lastly here, we'll look at Wingstop, which this was a extremely expensive stock, trading up around 400. Well, now we start to see that, okay, well, where's that period where you don't really want to be long here? Here you see that blue line crossing below the black line, really narrows and get very close there, but actually remains on the bearish side there. You can see here by a few cents here remaining on that bearish side and indicating that, okay, well, once that neural index flips bearish, what's likely to happen? That momentum kicks back up into the market. You can just see all of this weakness from the predictive forecast, and that leading to, in this case, the catalyst around earnings just driving the share price lower. So in this case, we've got a really nice move overall to the downside, about a 31% decline in just 23 trading days. And of course, that accompanied by these very accurate predicted highs and lows. You see, early as this gets started, we'll look up towards those predicted highs to get a trending or swing position on. And then we see multiple entries along the way to really adjust that position very clearly. Bias to the bearish side here. So again, really nice decline. If you're trading options or potentially hedging parts of your portfolio, obviously these markets that are declining 10, 20, 30% act as a nice balance when we see the overall index starting to slip lower after some very nice advances, right? So once again, this has been our Hot Stocks Outlook for November 1st, 2024. Thank you all for watching. Best of luck out there, and bye for now.